Hi, this is Steve from Freshagenda again, and I've got my colleague Vuko with me, and we are going to kick through another fundamentals session, and this time looking at some different issues to what we looked at before. So today's session in fundamentals is going to deal with changes in skim milk powder. Some background to this: there's been quite a bit of price action, a lot of selling off. And forward values have slipped quite a bit in the last week in particular. That's 2 weeks of comparison there for New Zealand prices, but both the European and US non-fat prices have slipped quite a bit in the last week as well. So the aim here is just that while that's going on, is there something different happening in the fundamentals in the background? And that's what we want to step through in today's session. Just going back to our most recent outlook, we had a quarterly outlook released early October, and these are the factors up front that we see as the major supply and demand variables that are impacting the global balance, impacting product values going forward. We thankfully won't be going through all of those today, and you can freeze your screen and just bat through those and down that list. Today's focus is going to be on the things driving change in the skim milk powder fundamentals, and that's also a busy page. Not so many things supportive of values on the demand side. We do have a bit of steadying demand from Mexico, which has been trending below expectation recently. That's expected to come back, and West Coast US logistics have improved. That might make it a bit easier to export. Down the left-hand side, there are some bullish factors later with milk production. While we've got that weaker spring in New Zealand at the moment, the factors that we are looking at as risks into 2023 are shown there, both in terms of feed supplies due to lower fertilizer applications, and then some of this ticking time bomb of feed quality into next year. And then there's that big sucker down the bottom, which is what these energy costs are going to do to milk drying. We are going to touch on some of those effects in today's session. Right-hand side, though, is where most of the action is. Weakening demand both domestically and in export markets. Short-term improvement in EU milk output. And then there's that factor up there on the demand side, which is a really important one, that we're seeing weaker cheese demand in Europe. And that's probably the thing in the last week that has reared its head the most. And that's going to impact milk use, with the fear that overproduction of cheese, that is a problem for manufacturers. So we are going to deal with some scenarios in our DTS Tools application. They're going to look at these factors that I'm highlighting there. So we're going to throw those in the mix, see what they suggest for product balances, and what that might mean for values. So just skipping through some of the background, in Vuko, we've seen a bit of a turnaround in European milk output recently. I think the weekly numbers, certainly coming from France and Germany, have got a lot better, haven't they?
They definitely have, Steve. And over the past 3 or 4 weeks, we're seeing positive numbers in both Germany and France. Even though their dairy cow numbers are lower, as reported by Eurostat in their May-June survey, I think the comparables from last year are so low that it's kind of easy for both of the countries to grow on top of that. Mm-hmm. And I think at the same time, what is happening is that the milk solids content in milk is improving.
Yep.
So the market is obviously looking at this tangible data coming in every week. And obviously prices of skim milk powder have responded lower. Yeah,
we're still seeing there's still elevated feed prices. That hasn't changed a great deal. They've gone off a little bit, but it's still the sheer size of the milk prices being paid is giving producers a bit of comfort, I suppose, if they've got better pastures coming through and more feed availability.
Yeah, I think that's the case certainly for at least some regions of France. You'll notice the chart at the bottom left for Normandy. The NDVIs were tracking lower for quite a while, but now they've definitely rebounded.
Yeah, as the chart in the middle also shows. So some of the other things that are really interesting with skim milk powder, particularly the contrast between European and US prices. Now, this is something we've looked at for a long time, the relative values and why they're different. Here's a bit of a simple assessment that the chart there showing that when European prices are higher than US prices on like for like, it coincides with higher output in the US, growth in output in the US, and that's started to occur again, isn't it?
Definitely it has. Yeah, there's definitely some correlation there on the chart. And I think part of what we've seen is that US milk production has come back stronger than expected. And at the same time, you see the last two green bars on the chart on the left. Non-fat dry milk production is growing, which has ultimately resulted in a bigger spread between the US and the EU price.
Yeah, so chart on the right, two charts on the right showing where that might have occurred, while the moving average total for skim has just started to flicker up again, right? The chart on the left is showing the monthly values, but we are seeing a bit of a stronger, particularly in the West, where there is a bit more flexibility to move milk around. See, cheese has gone down a bit, but non-fat picking up on an annual return basis. So there's some interesting things to watch about the US product mix that might be impacting these values.
Very key topic right now because we've seen a persistent spread between class 4 and class 3 values in the US.
Okay, so some interesting trade trends as well. This is taken from some long-term analysis we do, just showing the trend lines, and there's some interesting top and bottom, trend high, trend low comparisons there for each of the three big markets: Mexico, MENA, Southeast Asia. We'll come up to China next. But they're interesting. If you step that back and just look at those trends, where we are to trend, Mexico a little bit under trend, and with values down, that might see them. We expect to see them come back a little harder later in the year. MENA it's a couple of different worlds in there. There's North Africa and Middle East, and they look quite different. But for simplicity, we see the total region just coming back up the trend. And Southeast Asia is under trend, and that's potentially got a little bit of softness to come because of the fear of inflation, what it might do to consumption. But and then China is trending well below. They did buy and use up quite a bit of stock, bought heavily last year. You can see that red line was stunning. This year we're seeing a much milder stocks to use. It's back towards where it was in 2019, but just kicking up lately, right? And it's got to be a concern with demand remaining weak, or the demand recovery remaining weak in China. So that's meaning that skim milk powder trade is probably still a little soft.
Yeah, trade is soft, and we've seen them import less in recent months. But at the same time, their reported domestic consumption is very low, and that's why you see, stocks to use rebounding.
Not growing. Okay. So let's check a few things into the mix. We're going to use our DTS platform, the DTS Tools version of the mothership model. So the Tools model allows us to do quite a bit of flexible modeling. So here we are at the menu of the DTS Tools. Vuko, you're going to show a couple of things here when we go to the dashboard to flex some of the parameters. Okay, so Vuko, why don't you start with European milk? We think there's a risk that might be a little better in the short term. So perhaps let's tweak that up. What we're going to watch happen here is the impact on skim milk balance sheet and what it might be doing to projected fundamentals in those two charts where Vuko's highlighting. So Vuko, if you tune up the EU milk production by 0.5% for the remaining months of the year, let's see what that does. Fairly strong changes in value there. Of course, we're not saying that corrects itself next year, but we can see immediately there's a drop in values in that chart on the right. And that may be the order of what we're going to see with stronger recovery in output. We might see that sort of return yet. That's within the scope of possible. Now, we're also talking a fair bit amongst ourselves about what happens early next year. And if there is some challenge with feed supply through winter, because we hear lots of anecdotal stories that there is a lower output of stored feed, or there's a lower stored feed being achieved, and then you come into spring when fertilizer is being given far lower application. Let's play those two together. From February next year, let's take that milk production down 0.5%.
So do we go from February to June?
February to June, yeah, let's do that.
Yeah, so 5 months.
5 months. And that's swinging the effect back. Skim values kind of do a little recovery. So we've also seen that fairly reasonable change in the butter value there, which is interesting as well, right? With the change in milk, naturally there's a bit of butter fat available. Now what we've seen so far, Vuko, has not altered the cheese mix, the mix between skim milk powder and cheese.
Correct.
In terms of the product mix. So if you then put all that product mix change through, so that we're saying the change in milk impacts skim and butter and leaves cheese alone, yeah?
Yeah, so executing this button will keep cheese production as in the baseline scenario.
Right.
So you automatically see a much bigger impact on the global skim milk powder balance sheet.
Yep.
With a corresponding deep cut into PFVs.
So there's some of the risks that may be playing out now, yeah, that people feeling that, or participants feeling that we might be seeing a greater availability of product if in fact cheese doesn't change. At the moment, I think our cheese output is a little lower. So in our base scenario here, we've just left cheese output flat, as you say in the button. Moved all that change in milk to skim and butter, firstly taking away, adding to it, and then taking away from it as we get into that more difficult. And you can see the net impact on values there. Butter was severely impacted. Skim milk powder comes back. It kind of comes back after a fall in the forward months, where we would see most of that impact going against. Now, with risks to cheese demand in Europe starting to be talked about more frequently, and see softening cheese prices in some of the spot quotes, this might be something that's unfolding. Now, we won't run through all the possible permutations, but one important thing we do want to have another look at here is overlay some of the weaker demand side influences and see what that does to this mixed scenario. So what we've brought up here, Vuko, these are the import demand side assumptions, and let's just start to play if we think skim milk powder demand in Southeast Asia is going to be weaker. So let's just chop this and say that's down 10% year on year, and that goes through to the end of the year, end of the calendar year. So they're starting to pare back some of those losses.
Yeah, and obviously skim milk powder PFVs are dropping even further, which is something the market may be expecting right now, given the lower movement
as well. If you then layer that with a bit of softer demand from China in the short term, so that goes down 10% or 5%. That's good. There's quite a risk there. Just those two. Now, I think we already have Mexico coming back a bit stronger as we go forward later in the year, so we may not need to massage that. But those two big risk factor markets, Southeast Asia and China, so that would layer on the problem, right? So we see going forward fundamentals weakening through this year, SMP coming just steadying there as we go into the early part of next year, but both, some weaker demand side layered on top of the fact that we might have a bit more product availability. That's what we could be in for with the SMP fundamentals. And you can see what it's done. Our PFV in this combined scenario moves down to around about 3,000 euros through 23.
So Steve, if we execute the PFVs button here at the top, it leads us to a section with a table at the bottom of the screen, where we see the impact on the PFVs as a difference from the baseline scenario. But at the same time, we see the live PFVs.
Yeah.
So obviously we have moved much lower for skim, lower than where the market expects prices to go.
Yep.
But this is certainly a very plausible scenario as well if you were to see, a lot more milk come back and then a shift to product mix.
Absolutely. I mean, if we see that demand, if we see that supply side risk play out in the short term and put more pressure on, it may be that gives the buying side a bit more confidence as well. Despite what we're seeing in terms of demand slowdown, that might actually bring buyers forward and take advantage of the lower value. So we may see some sort of mixture of that effect. But look, that's been interesting, Vuko. Thanks for running that. So we've only shown a couple of the features of the DTS tools here, just the risk management, what if, and sensitivity analysis work. There's a lot of, obviously those trade trends, Vuko, you took those out of a cute little lookup tool here that lets you look at those trends.
That's correct. Yeah.
And what we've also got on here is our balance sheets for China and where that S&P outlook comes, the stocks to use on that comes. So quite a few other things we could show. No time for that today, but let's just finish up there. Thanks for watching. Hope this has been interesting. We'll be back sometime very soon with another edition of Fundamentals, but watch every GDT week for our normal weekly take. Thanks very much. Thanks, Vuko.
Thanks, Steve.